What up, everybody? Cal Crypto. Welcome back to the channel. Today, we have a lot of interesting news for Bitcoin, and things are really heating up. Obviously, if you guys have been watching the market for the last 48 hours, it's been extremely crazy. Traders have been just getting destroyed. It's been brutal out there. That is why I have been staying out as far as trading. Personally, I was part of the massive liquidation for longs for Bitcoin when it suddenly dropped from, it broke out here. Everyone thought, 70,000, including myself, is imminent. We dropped all the way down to 53,300. I got liquidated. So did, I think, $1.9 billion worth of longs across all exchanges. So it was rough, but I always make sure that I use proper risk management and I can play for another day. And obviously, guys, I never use my holding portfolio to trade. My trading portfolio is totally different. So not financial advice, just something I personally do. And I can see why some people think it's extremely stupid, including myself sometimes, but it keeps things interesting. Today, what can I say? I was about to make a video a few hours ago, and Bitcoin's price just started pumping for maybe a few reasons. I think that I know, but everyone thinks they know, and we always speculate on why the prices go up and down. But I think overall, it's just a bigger picture. We were sitting at 55,000 on this 4-hour candle. So like in the span of 4 hours, Bitcoin went from the upper 54,000 to $58,000, and now we're currently breaking the resistance that used to be, hopefully our newfound support. And Bitcoin looked like it was forming a death cross. If you guys don't know what a death cross is, it's when, in this case, the white line is the 21 moving average and the yellow line is the 50-day moving average, and they move together when the price is going up. But when the 21 starts to dip below the 50, when it crosses over, that is bad. That is bearish. As you can see, guys, we did this here where it went under, and we had that 24% drop and a bounce off this legacy trend line. So it looked like it was going to do that again, and I was prepared for the $51,000 level to the $47,000 level, where a lot of whales, people with a lot of Bitcoin, have been buying. But that was not the case, guys. We have just pumped here, pretty good volume, and it could be the stimulus. It could be, Jerome Powell's speech on, overall economic stability. I'm not sure, but we're pumping up again. And for everyone who bought at 57,000 or 56,000 and freaked out when it went to 54, look, you're already back, and it's not even 2 hours later. So a lot of excitement, a lot of good news. Let's get straight into it. As of right now, guys, my summary on the Bitcoin price is that we're breaking key levels of resistance, and if this volume continues to look really good, then I could see us going to some insanely high levels, and I'm going to show you why in this later on in this video. So the first thing is, if you guys haven't seen this, Grayscale actually added 5 new cryptocurrencies to their trust. So this is due to institutional demand or people with just a lot of money, high wealth individuals that wanted to be more exposed to cryptocurrency, and they don't want to buy it or hold it themselves. They're just like, hey, here's my money. You guys do all the work for me. You hold it, and we don't have to worry about it. We just hand you money and we're good to go. These were basic attention token. If you guys haven't looked into that project, it's awesome. I've used the Brave browser for a long time. It destroys ads and it blocks your cookies, and it's a great product. You can actually earn free BAT token for just using their web browser. So it's a pretty cool project. If you haven't looked into it, you should. Chainlink. There's a lot of hype around Chainlink, guys. I personally think it's a pretty cool project. There's been some concerns about the developers selling off their tokens, but guys, as all projects need to grow and expand, you have to use money to do that. So they obviously have to use some of the Chainlink that they have. to fund those further developments in their project. So Chainlink, Decentraland. So a few of my buddies hold Decentraland and it's been on a tear. I mean, even my little brother holds Decentraland. I'm not a big altcoin guy, but congrats to all the people who are winning off altcoins right now. I think it's awesome for you guys, and I hope they continue to rally for you. I would always say use caution, but if you are doing the right things, then you shouldn't have anything to worry about. Filecoin and LivePeer. I've never heard of LivePeer. I've heard of Filecoin, BAT, Chainlink, and Decentraland. Really interesting projects. These are now officially part of Grayscale's trust. If you guys don't know what Grayscale is, it's just a custodian. It's like a crypto hedge fund where rich people go to say, hey, I want to be exposed to cryptocurrencies, but I don't want to do it myself. Here's my money. You do it for me. That's all Grayscale is. Grayscale has blown up though. I mean, I think at the beginning of 2019, they had $2 billion under management. So they had $2 billion worth of clients' money that they were managing. By the end of 2020, that had turned into 22 billion, and now it is at 42.9 billion. Grayscale also holds, I think, like 5% of, or no, I'm sorry, 3% of the total Bitcoin supply. So it's crazy, guys. I mean, Grayscale is, if Bitcoin does something insane in the future, or just these cryptocurrencies in general, they are going to be an extremely powerful and influential company, like possibly the new BlackRock of 20 years from now. And if you guys don't know what BlackRock is, it's a traditional hedge fund that has like 8 trillion under management. 8 trillion, literally a third of our GDP as a country. Blows my mind. So Grayscale's growing. They're doing crazy things. That's all for this news. It's really, really interesting because they've been hinting at this for a while, but they haven't officially done it. Now it's officially out there. So it's pretty cool. Next piece of news is Bitcoin's hands of steel. 37% of Bitcoin supply hasn't moved since 2017. 55% sat idle after 2018's bottom. I was one of those people because why was I going to sell it at a total loss when I could hold it and I believed in it and it was going to come back? I truly believed that, and it did. So it just talks about ever since Bitcoin touched its all-time high of 61K, prices have been a little bit more up and down, to say the least. Currently, BTC is hovering just above the 55K handle, and it has happened awfully close to the anniversary of March 12th. If you don't know what that was, it's literally when Bitcoin dropped 50% in a day. I watched my portfolio get cut in half in hours. Like the stock market was dumping, Bitcoin, cryptocurrencies were bleeding, and I knew it was like, I wish I had more money at the time to buy a $3,800 Bitcoin, because I would have. I cannot say that I did. Unfortunate, but it's okay. So it's funny because that's the anniversary of that day that they're mentioning, and it just goes on to mention about how they're trying to figure out the fair value of Bitcoin right now, and the market's kind of exploring that. So we'll see as these more institutions get more involved and more adoption happens for Bitcoin. But as we've already talked about on this channel, guys, it is very, very obvious that there is a large group of people like myself. And this is why people kind of call Bitcoiners like, it's a religion, but it's not a religion. It's just people who are very passionate about the technology and decentralization of, finance and people controlling their wealth. Like that's a super exciting thing. And I really, really want that to succeed because I believe in that. It's not like a libertarian thing for me. It's just like, I believe that's what's right. And I would like to see that happen because this could change a lot of people's lives for the better, as opposed to what we deal with now, where 1% of the wealth is held by, or I'm sorry, 1% holds a third of America's wealth. Sorry about that. I just don't believe in that system. I don't think that's right. And it's not to say those people didn't work hard and, they got what they, worked for, but it's just, I think we can have a better way. So that's why I really am passionate about Bitcoin, guys. And it shows here that there are people who will not sell their Bitcoin at 100K, at 200K, because eventually you stop seeing Bitcoin in US dollars. Like, it's exciting and it's fun to be, seeing your investment go up from 1,000 to 2,000 to 3,000 to 10,000. Oh my gosh, I'm making so many gains. It's great. But as the US dollar fundamentally keeps getting devalued and losing purchasing power over time, you start to realize that the value of what you're holding is the actual asset itself. As Michael Saylor says, it's property in cyberspace. I believe that. I mean, I've been on that philosophy for a while now, and it's kind of coming to fruition, and people are seeing this. So if people are panic selling and people are learning about Bitcoin, there is always going to be someone who comes behind you who's gladly willing to scoop up that supply. I mean, I myself, like, if I could have more Bitcoin, I would. I cost average in every month just to slowly grow my position in Bitcoin, because it doesn't matter about the price. It matters about the long-term value of this technology evolving to where it might be. So it shows about how on-chain data, which is data they pull from the blockchain, shows that transaction volume accounts for 1 million BTC per day. And that researchers can infer that to a large extent, it is the same set of coins that are being transferred into the network over and over again. This is all just bullish news, guys. It's just saying that, like, as a Bitcoin holder, you eventually learn how to ignore price action, believe in the asset that you hold, and you're not selling it. That's what this is summing all this up to. So it's saying that, like, if you've been a holder for 3+ years, you keep accumulating because you're realizing that the holders that bought in the last 6 to 12 months are selling. And it's sad to see, because they're missing out on this potential of this asset. But just remember that, guys. If you buy, just use the money that you can afford to not worry about, so you're not stressing about the price all the time. You're just enjoying holding this asset and watching it grow over time. You're not investing your house and your wife and your kids into Bitcoin. You're just investing what you can and watching it grow over time and believing in the fundamentals of this asset. This is another really interesting article that says hedge fund managers say sell-off in US Treasury bonds is a threat to high-flying assets like BTC. So essentially, guys, I think the central bankers are worried that we're going to become an economy based on asset power. Like, who has the most assets that are valuable? Property, gold, Bitcoin, cryptocurrencies, and that the 60-40 portfolio of 60% stocks and 40% bonds is going away, because bonds used to yield like 15% back in I think the 60s and the 50s, and that has just gone down to almost 1%, which after inflation of 2%, you're actually buying a negative yielding bond, meaning that if I have $5,000 and I lock it up in a 10-year treasury that promises me 1.15%, I'm losing 0.85% every single year due to inflation. That makes zero sense, guys. If you are at all financially savvy and you look into these things, why would you do that? There is no incentive for you to do that. But you can't hike up bond prices right now because, then we have to reel back that stimulus, and then all the cracks in the system kind of come out, and you start to see what's going to happen when the Fed pulls back the stimulus and they stop buying mortgage-backed securities and they stop buying debt. I think they purchased like $170 billion every month since last year of a basket of just bonds, treasuries, debt, to keep the party going. But it will end. It will have to end. And this just shows that, the recent sell-off in US government bonds could accelerate, and this could threaten high-flying assets like cryptocurrencies and blank check companies. But the thing is, guys, is they say the improving economy is coming. And, all that's going to mean is that the velocity of money is going to go up. And if you don't know what the velocity of money is, it's just the rate at which money changes hands. So if I'm an individual and I go to Sprouts grocery store and I spend $10, and Sprouts spends it to the farmer, and the farmer spends it to another consumer, that's a velocity money of 4 or 5. Like it's moving quickly through people, and that's good. That's usually a sign of a healthy economy. Velocity of money zooming around. But velocity of money is actually at an all-time low, meaning people are hoarding cash, scared to spend their money because we're in a pandemic and I don't know if I'll have a job tomorrow. So they're hoarding money. The money supply is growing. That actually leads to deflation. But when the economy is given the green light, open back up and everyone go do your thing, like in Texas or Oklahoma, or some of these other states where you can just go and do your thing with Corona, then inflation will increase because consumer demand will go up, and therefore there will be more money in the system, and then individuals who offer goods and services will have to raise their prices to meet this inflated money supply, where you get inflation and prices go up for goods and services. So it talks about how the Federal Reserve considers reeling back its stimulus measures, but it can't really right now. And that's actually something we'll talk about later, that the surge in cryptocurrencies like Bitcoin is a manifestation of an environment created by the loose monetary policy of the central bank and stimulus provided by Congress. We talked about this a million times. The more money printing you do, the more people are going to lose confidence in the US dollar as they see their purchasing power going down, as we showed that M1 money supply going up. When you have an asset that can just be printed out of thin air, eventually that asset does not, scarcity equals value in our economic minds as humans. That's why gold has had value. That's why things that are rare have a value. Even if things are artificially scarce like diamonds, they still have value. So scarcity equals value. And if something isn't scarce anymore, like the US dollar that just gets printed into oblivion, obviously its value is going to drop. So it's just, this is a report just going off about how, the Treasury sell-off and how this environment has happened for Bitcoin based on the monetary policy of the Fed. That's all it is. That's all it comes down to, is the Fed is really the Bitcoin's best friend as far as doing amazing things for its use case and why it's relevant. So then the next thing we'll talk about, guys, is a lot of people are scared about the Bitcoin top and that this is it for Bitcoin. We reached 60,000. I've heard of like a weekly bearish divergence on the RSI, and that's all like trader talk. And they're basically saying, we haven't seen the signal since 2017. So we've got to be at the top and we're about to dump and we're going back to the bear market. That was it. Bitcoin's over. I just do not see that happening, guys, because there is so much data now this time around for us to see what's actually happening macro wise and on the shorter time frame. And this is showing that basically Bitcoin, this chart shows how many days it takes for Bitcoin's price to double. So you can see when we went through the insane rally of 2017, the days for Bitcoin's price to double kept getting smaller and smaller and smaller. Like it went from 73 days to almost 12 days, I think, at the peak, meaning that Bitcoin's price was doubling almost every 10 days, 12 days. And that is a sign of over exuberance, guys. That is a sign of like, we're going up way too fast and it's not sustainable. But as you can see back here in the bear market, Bitcoin's price to double days extended all the way up to over a year. So you could tell that like we were almost oversold. Like people were bearish on the market. They weren't touching Bitcoin with a 20-foot pole. That thing just was 20,000. Now it's 3,000. I am not investing in that. This bubble scam tulip mania. But you can see now as Bitcoin has rallied to insane levels from 11,000 to 57,000, while the days for Bitcoin's price to double have gone down, we're still sitting around the 49-day level for it to double, meaning that there's a lot of room to grow. But like when Bitcoin is 100K, 200K, and it's going up $20,000, $30,000 in a day, and this price to double day count goes to like 12, 10, that might be a warning sign for me, guys, of this is absolute mania and we're overextended, but we're not there yet. Like this Bitcoin being 60K is extremely justified. And we talked about in the last video, So I'm not worried about this top and this FUD and people spreading this around, because there's no way Bitcoin's close to the top. And I'm not just sitting here like with my Bitcoin bias preaching to you guys about how Bitcoin's never going to come down. It's going to have its corrections, but at the same time, if people think we're at a cycle top, they're completely wrong. I don't even believe in the cycles anymore, but you know, and if I see it again, I wouldn't be surprised. But at the same time, there's way too many external things happening with the Bitcoin fundamentals for me to feel like it's just going to follow the same cycles over and over again. Now, this is probably the most interesting article of the day, guys. Nearly 10% of the 380 billion in stimulus checks may be used to buy Bitcoin and stocks. A recent survey came out that Americans are ready to shop for Bitcoin and stocks. So Mizuho Securities, never heard of them, on Monday estimates that 10% or nearly 40 billion of the 380 billion in stimulus checks are going to be used to purchase Bitcoin and stocks. Now, they surveyed 235 individuals with less than $150,000 worth of household income. Of that, 200 said they expect to receive the third round of stimulus in the next coming days. And nearly 2 in 5 of the recipients expected to use some portion of their checks to invest. They responded with that they prefer Bitcoin over stocks. And that's just because probably they've seen that if you put your last stimulus check in April of 2020 into Bitcoin, it's like a 800% return. So yeah, people are a little bit more intrigued than the S&P 500 return of like 20% a year, which is now less. But you know, people are starting to piece things together. It says the survey predicts that Bitcoin will account for about 60% of the total incremental investment spent. We calculated it could add as much as 2 to 3% to Bitcoin's current $1.1 trillion market value. So now that there's more outlets for people to buy Bitcoin than ever, being PayPal, Square, Coinbase, Gemini, Kraken, Binance, wherever else, you can imagine that liquidity can enter the system easier. And that is how it's going to continue to be. As mass adoption happens, you're going to be able to buy Bitcoin here, there, everywhere. Bitcoin's ATMs, I've never seen one personally, but they've grown more than 60% year to the last year. And you just keep seeing easier ways for average people to get into crypto. It used to be this like scratch your head type of thing. Where do I do it? And now it's just a thing where, you know, you can ask someone that you know, and most likely they know a way for you to get fiat cash into cryptocurrency. So this is really interesting because I didn't really necessarily believe in the stimulus hype. I wasn't assuming that people are going to spend their stimulus on Bitcoin. But at the same time, guys, this stimulus is going to people that aren't necessarily out of a job. And they're kind of viewing this as like free money. Like if I made 72K a year, I was single, I haven't lost my job, like this is a free $1,400. So why not invest it? I mean, I have nothing to lose. I literally just got this helicopter money from the Federal Reserve that was printed out of thin air that fell into my pocket. So why not invest it? And this is going to be interesting. And I don't know if this is why we've seen the pump from 55,000 to 58,000. People got their stimulus checks, I think, starting on the 14th. I believe some of the people I know got theirs yesterday. But all in all, it's going to be interesting because there's so far, I think a lot of these factors combined together have attributed to Bitcoin's recent, you know, astronomical climb. And even as we're speaking, Bitcoin's about to test 59,000. So it's exciting, guys. And it says that roughly 90% of Americans' households will be eligible for these stimulus checks. So it's not like they're just going to like the poorest of the poor. Like these stimulus checks are flying everywhere, and they most likely apparently are looking like they're going to go into cryptocurrencies and stocks. So stay tuned, guys. If you plan on using some of your stimulus to buy Bitcoin, put it in the comments below. And last thing, guys, is we had the Federal Reserve Chairman come out today, Mr. Powell, talking about interest rates and how he doesn't expect to hike them up. People are scared of this because if he hikes up interest rates, then the banks that borrow capital from the Federal Reserve will have to borrow it at a higher rate, therefore charging consumers a higher rate to borrow. And if you guys don't know how that works, it's basically just a bank makes money by lending out your money. So they only have to keep a certain reserve amount of capital. So if you have $5,000 in your bank account, that $5,000 is lent out somewhere and your digital number says 5,000 and the banks are lending it to people here and there for them to make money off the interest that they receive. But the problem is now the rates are so low, they're nearly zero, meaning that when the banks borrow capital, it costs them almost nothing. So this keeps, the incentive for our rates, our mortgage rates of 2.5%, or, our rates on personal loans that are super low, it attracts us to go to the banks and borrow money. Then the banks make money off of our money. And we think we're getting a good deal. They're getting a good deal. But the problem is in a strong economy, those rates need to go up eventually. So people are concerned that the Federal Reserve was going to start raising rates again. You can see Europe, they've had negative interest rates for forever, and their economy is just doing terrible. That's a really dangerous game, and the US hasn't crossed there yet, but Japan has, Europe has. You're playing with fire at that point. And many investors like Ray Dalio and other famous people believe the same thing. So as this, evolves, he basically said that he doesn't plan on, hiking up rates. And that's why the stock market and these other markets tend to rally, because as capital is super cheap to borrow for corporate entities and even individuals, it's like free money. It's like, hey, if I can get a personal loan for an insane interest rate, and I know I can find something that will return on that loan higher than the interest rate. If it was 2% and the asset I'm investing in is 22% on average, like the S&P over the course of a year, I know I can pay back that loan. So it just incentivizes people to borrow. And you see these asset markets and these capital markets keep getting injected with more and more borrowed money. So he basically expects to leave rates unchanged, and people are wondering what's going to happen next. And you're still going to see money printing, and you're still going to see the stimulus continue to go. So that's why I don't see Bitcoin ending anytime soon. And it's just, the proof is there, guys. That's really all I have for the video. Please let me know what you think. I tried to keep this one shorter, but I ended up rambling again. So here we are. Thank you guys for watching. Thank you so much for your time. And with that, guys, Cal Crypto is out.